Tuesday, January 20th, 4:49 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Yesterday was a U.S. federal holiday, so U.S. stock market was closed. So this is a short trading week. So we missed out on one day of price action, but today had a lot of price action. Gonna show you the major U.S. stock indexes, include multiple time frames, daily, weekly, and monthly. You help identify setups, signals, and entry. Price action that happened today, I shared to my Patreon members that are in the higher level the past few days, last week early. I was thinking, and the week before that actually too, I was thinking last week we might actually have a sell-off pending the court decision with the executive branch that was released, the time and date, as I said, but they didn't release a lot of information. They haven't made a solid decision. I also said last week, I was thinking if that sell-off doesn't occur, either late last week, I said also expecting this week. So it's occurring. That being said, I'm still bullish bias, many financial assets, and I explained those over the weekend in my futures video. Again, that's for the people in the higher levels of Patreon. Let's go look at the daily charts and also the watch list because the stock market's closed. On the top left, the major stock indexes, they all closed red. And below that, the 11 sectors of the S&P 500, only one closed green, XLP. That's a separate video. And the Magnificent 7, all closed green. Sorry, all closed red. Yeah. XLP, the only one that closed green. Interesting. No, not interesting if you're situation aware of the stock sectors. Again, that's later other videos. So we're looking at the daily charts, 3-month charts. S&P 500, huge gap down this morning. Huge trading range, already broke the low of this year. Big bearish candle. The Nasdaq 100 also gapped down this morning, broke the low of this year. The Dow Jones Industrial Average gapped down this morning, has not filled that gap yet here. Did not break the low of this year. Big difference again. Dow 30 did not break the low of the year, but the Nasdaq 100 and the S&P 500 did. The Dow Transports, look at filled that gap and made a new gap. Of course, it hasn't taken the low of the year up. The Dow Utilities, not a big sell-off compared to the other ones, because again, not gap down. Utilities, defensive stocks, pay high dividends. And the Russell 2000. Yep, gap down, fill that gap. Did not break the low of the year. So let me remove these, the ones that fill the gap, which is interesting. Look at this. The Russell 2000, the only one that closed green. But again, it didn't close all green from the top, just from the open and close. So the panic was the big companies, the leadership of the economy. Now let's go to the top down. First, the S&P 500. The month's not over yet. It's already halfway through the month. And look, on the top right, monthly candle, we did take out the high of last year. Nice. But we're back below it. The weekly chart, huge trading range for one trading day. Again, the weekly's not done until it close on Friday. We only had one trading day so far this week. And look at that huge trading range. All bearish. Wow. Key level, midpoint. Right there. The daily chart. Just think when the Asian market opens tonight and overnight, when the European market opens tonight, how the future is going to react. So the key levels of this are on my videos of the S&P 500 futures. Let's go on to the next. The NASDAQ 100. Big difference. It has not taken out the last year's high yet, or the S&P 500 has. So this is more weaker than the S&P 500. Look at the weekly here. Let's go to daily. So when you look here at the monthly, last month was the inside candle, broke above it, back inside of it. The middle grid, the weekly, still huge consolidation here. Where the daily broke the low of this year. Potential more on the downside. Go to the Dow Jones Industrial Average. The Dow Jones Industrial Average, big difference. It's outperforming the NASDAQ 100. It broke the high of last year. It's trading below it, but again, outstanding or making it higher high, higher low. The weekly chart already broke the low of this year. A little buyer stepping in there too, interesting. Just doing a big 100% retracement of that big green candle, the Dow. And the daily chart, again, huge consolidation up here. Broke below it, big bearish body. Again, did not take out the low of this year yet. Those are the three major stock indexes. Let's go deeper into the economy. The Dow Transports. This year, it broke the high of last year. I'll even open up more. Yeah, this is the Dow Transports. We broke the high of last year, and we broke the high of 2024, and we broke the high of 2021. I'm going to include this for a longer duration. Put it for 20 years. Should put it for 10. Again, top center was the high of 2021. The Dow Transports finally broke it. And the monthly candle's not done yet, so I'll leave these up there. Big difference performance. It's slow on catching up with the other stock indexes. I explained that several times the past few days. I'll say that here again closer to the end of the video. The weekly chart of the Dow Transports. The trend reversed. But again, the candle's not done till the close of Friday. So midpoint, big red candle. Expect buyers there, and that's what we got. And the daily chart of Dow Transports. Bearish candle, so maybe we get a retest partly there next few days. But again, big concerns, big trading range. Now we'll go to that Dow Utilities, what's referred to as more fixed income of the, because they pay dividends. Again, Dow Utilities are not the prettiest companies. They're utility companies. They're not high tech, but they pay high dividends. People gravitate towards those when they think there's going to be less growth, such as in the tech companies. They want to get some kind of additional income. So they typically look for, if they want to stay in the equity market, look for stocks that pay high dividends. For the monthly, yeah, the trend is still down, lower lows, lower high. And we're still below the highs of last year. So for this year, look at that. Here's the low this year, the weekly, big green candle, midpoint, retest, nice. And the daily chart, the trend is down. See no beautiful single yet. Let's go to the Russell 2000. Russell 2000, 2,000 companies listed in that index. Very small companies compared to the NASDAQ 100 in value, compared to the Dow Jones in value. Again, Russell 2000, very sensitive to higher interest rates. Monthly chart finally broke the high of last year. Weekly chart having taken out the range of last week. And the daily chart reverse. Put this now on the weekly to put it in more perspective. Five-year chart, S&P 500, weekly. Again, we broke the highs of last year. NASDAQ 100 has not broke the highs of last year. Dow Jones broke the highs of last year. Those three major indexes. The Dow Transports, it's part of the S&P 500. The Dow Utilities, part of the S&P 500. Same with the Dow Jones and the Russell 2000. But the three first ones are the major indexes most people gravitate towards investing and trading. Where the Dow Utilities, Dow Transports, and the Russell 2000, they're the laggers. So some people have the philosophy is when the market's very bullish, but overextended, and they still think there's more on the upside, they continue investing, bullish bias, into companies that have less value, less market share globally. That's kind of like reckless. Yeah. So the point is, history repeats itself. When you have the weaker ones finally starting catching up and trend up with the big boys, we're closer to more bearish than a momentum of continued bias. I mentioned that more in detail on my Patreon page for the higher levels. Yep. So more concerning up here. Sitting on hands, looking for pullbacks, sweet spots. Big events we still got occurring later this month with the Federal Reserve scheduled and the event that Congress needs to take care of for the last Friday of this month, or the U.S. government shuts down again. Thank you as always, spending just a little time with me. That's it for the video. Thank you for watching.